This will be what? Partners capital. Why do we call it as partners capital? Means because this amount will be shown in partners capital. In this problem we got revaluation profit or loss? Loss. Why? Because this column will be more and this column is less. We call it as revaluation loss. A warm welcome to one and all. This is your Adar sir here, lecturing in Vidhyaashram Pre-University College, the Temple of Excellence. Now we are in the session 3 as well as your unit number 3, that will be called as admission of a partner. Now we are doing the session called revision sessions. Now we done with your unit 1 as well as unit 2. The unit 1 it is for non-profit organization and unit 2 will be your partnership basics. Now the unit 3 will be your admission of a partner, and before I'll go into your admission of a partner, we'll discuss how much marks will be allotted for this particular topic as well as what kind of problems you may expect from this particular topic. The problem number 1, this will be your admission of a partner. I'll go in detail what are the procedure to do your admission of a partner, what is the calculation procedure, what are the accounts we are supposed to prepare, each and everything we will discuss in today's session. Now, before I start this, how much the marks weightage for this particular unit? Again, this will be your theory 1 mark and 12 mark. It will cover max to max 13 marks in your examination. Now, you may get whatever the marks I have mentioned here, excluding your POQ. POQ will be asked like prepare revaluation account with imaginary figures, prepare partners capital account with imaginary figures. This kind of POQ will be asked from this particular topic. Now, we'll go with your problem number 1. Before we go to the problem, what we are supposed to do in the admission of a partner. The first one will be revaluation account. And the second one, partners capital account. And the third one, balance sheet. We also call it as new balance sheet. New balance sheet in the sense balance sheet after admission of a partner. Along with this, in the question paper, if they ask prepare bank account, we are supposed to prepare bank account also. Hope you are clear. Yes. Now we'll start with problem number 1, that will be your admission of a partner. And remember, whatever the admission or retirement we do, everywhere we will find a word called goodwill. Goodwill in the sense the intangible asset, and from the last year the PU board they have specifically mentioned that whatever problem we do, that must be as per AS 26, Accounting Standard 26. What is Accounting Standard 26 and how we will calculate that, everything I'll explain you while doing the problem. Accounting Standard 26 will not disturb the problem. The problem procedure, the pattern will be the same thing, but only while calculating or while mentioning the goodwill value, then we have to keep it in mind that we are doing as per Accounting Standard 26. Now, liability they have given and asset they have given, all the information they have provided. Now, along with balance sheet they have given adjustment also, like first one we are supposed to prepare what? Yes, we are supposed to prepare revaluation account. Now, where we will do revaluation, in the revaluation, in the question paper, whatever adjustments are given, according to the adjustment we have to go for a revaluation account. Now, under revaluation account, remember any changes happened, like furniture last year balance sheet it was 50,000, now it has become 60,000. What is the changes? 10,000 increased. And any creditors, it was 5,000, now it has decreased to 3,000. There is a changes of 2,000. Bad debts of 500 rupees. These kind of changes we are supposed to do. Now, Aarti and Bharati are the old partners. Now, the new partner is adding. Jayanti brings cash of 20,000 capital and 10,000 towards goodwill. This will go to partners capital account. This will not affect your revaluation. Building are appreciated, revaluation. Machinery is depreciated, revaluation. Any changes happen for your asset, increase in asset, decrease in asset, increase in liability, decrease in liability. These are the changes happens we are supposed to mention in revaluation account. Next, provision for doubtful debts is increased by 1000. This will also your revaluation. The new profit sharing ratio between partners 5:3:2. What is the old ratio? 3:2. Remember, in the question paper, old ratio is given. Yes, 3:2. New ratio is given. Yes, 5:3:2. Then what you are supposed to do? Always remember, calculate sacrifice ratio. Old ratio is given, new ratio is given. Always you have to calculate sacrifice ratio. If the new ratio is not given in the question paper, then don't calculate sacrifice ratio. All the calculation will be done on old ratio. Hope you all remember. Yes, if new ratio is given, old is also given, then you must calculate sacrifice ratio. If the new ratios are not given, then sacrifice ratio is not required. Good. Now, all the informations given, first we'll go with revaluation account. This will be a revaluation account. I'll give you shortcut for revaluation. What is a shortcut means? Assume that this is your revaluation account. Any increase in asset, decrease in liability will come under credit side. Then decrease in asset, increase in liability, any expenses and any bad debts will come under debit side. Hope you are clear. Decrease in asset, increase in liability, all the expenses, bad debts, debit side. Increase in asset and decrease in liability always on credit side. Always remember this format. Your 90% of revaluation concept will be cleared. Now, appreciated means what? Increased. Building is what? Asset. Now, appreciated this side and depreciation on machinery this side, provision for doubtful this side. We have gone as per the format. I'll show you how it is. Now, building are appreciated by 5,000. We have written 5,000. Then machinery depreciated 20%. How to calculate 20%? Go back to your balance sheet. Your machinery value is 35,000 into 20%. See, machinery value 35,000 into 20%. Similarly, provision for doubtful debts. Always calculate on debtors. Now, so what is your debtors value? Yes, your debtors value is given around 20,000. Don't calculate on 19,400. Always go with your debtors value. Now, 20,000 they have given. So it will be your how much? Provision for doubtful debts increased by 1,000. If percentage is given, you are supposed to calculate on 20,000. But in this problem, they have given number directly. Take 1,000 in the revaluation account. Now, 1,000 we have considered. Now see which side is more, your debit side or credit side. Your debit side, you will get 7 plus 1, it is 8,000. Here also write 8,000. 8 minus 5,000, your answer will be 3,000. Hope you are clear. Good. This will be what? Partners capital. Why do we call it as partners capital? Means because this amount will be shown in partners capital. Now, we're done with this. This 3,000 should be what? 3:2 ratio. We have divided to these two people. Hope you are clear. Good. We have done with your revaluation account. The next part will be what? Partners capital account. Partners capital account also I'll give you the shortcut as well as the format. This will be your partners capital account. Assume that there are 3 partners there. First one will be what? By balance brought down. Balance brought down means the capital value you are supposed to write. By general reserve. By profit and loss by revaluation profit by your goodwill by bank, the new partner, whatever he bought. These things will come under credit side. Again, I'll repeat. First one is balance brought down, general reserve, profit and loss account, revaluation profit. This is what? Revaluation profit and goodwill. And the last one we call it as bank. Bank will be considered what? The amount bought by new partner. Clear? Yes. Everything should be filled for these two partners and the bank will come for last partner. Clear? This will be partners capital account format. Now see the balance brought down. We have written capital value. Then in this problem general reserve P&L is not there. See, I'll go back to your balance sheet. See, there is no general reserve, there is no P&L. So we don't take. Only capital value they have given 50 and 20,000 we have considered. Now, so in this 50,000, 25 and the cash or bank, it is nothing but the amount bought by new partner. So they have given Jayanti brings 20,000 as capital, 10,000 towards goodwill. Now see, earlier we used to take only 20,000 whatever capital bought by new partner. But now we are following what? Accounting standard 26, your intangible asset, goodwill. That is the reason even this 10,000 also added. Earlier we were not adding this 10,000. We used to write only 20,000. But now we are writing 20 plus 10. It will be 30,000. So 30,000 is done. Yes. Jayanti's capital. Now, out of 30,000, what is this? 20,000 as capital, 10,000 as goodwill. That 10,000 will go to whom? Goodwill means what? The extra money bought by new partner. Why extra money bought by new partner? I'll give you best example in this. Now, me and your partners, we are running business since 10 years. If we want to take new partner, if we take new partner, whatever profit we were sharing, we have to give it to that partner also. Yes, we are sacrificing in this. If you want to sacrifice means you should get something. Yes, I'll tell that person, new partner, that give me some money. How he will give money? In the form of goodwill. He will bring 50,000 as capital. Along with capital, he gives some extra money for both. That will be called as goodwill, extra money bought by partner. That extra money will go to whom? We, means the old partners. That is called your goodwill value. Out of 20,000 capital, it goes to his account only. Or in this problem, Jayanti, her account only it goes. But extra 10,000, whatever she bought, that will go to whom? The new old partners. The 10,000 in the ratio of sacrifice. How to calculate sacrifice? As I told you, I'll show you that. Your old ratio 3:2, new ratio 5:3:2. This minus this, you will get your sacrifice ratio. That is only called as 1:1. I'll take separate revision class how to calculate your sacrifice ratio, how to calculate your gain ratio. Clear? Now, this will be what? 1:1 will be called as your sacrifice ratio. Now, come back. Now, this 10,000 is divided 5,000, 5,000. Hope you are clear. Fine. Once you are done with this, in this problem we got revaluation profit or loss? Loss. Why? Because your this column will be more and this column is less. We call it as revaluation loss. If you get balance this side, means this will be revaluation profit. This will be revaluation loss. Now, in this, whatever the goodwill taken by this old partner, we have to show it here. That is only your accounting standard 26. What is the procedure for accounting standard 26? 10,000 you have to show it here to Jayanti account. From 10,000 in the sacrifice ratio distributed to these two partners. Again same 10,000 you have to show it in the Jayanti account. Hope you are clear. You have to show it to Jayanti account here also, here also. Later it has to be given to old partner. In the question, new ratio is given, distribute in sacrifice ratio. In the question paper, new ratio is not given, then distribute in old ratio. Hope you are clear. Yes. Now, so up to this we have done. Then what is the cash? 5,000, 5,000. Why it is 5,000, 5,000 means they have given. Jayanti brings 20,000 as capital, 10,000 towards goodwill. Goodwill is withdrawn by partners. When it is withdrawn by partners, it will be 5 and 5. If the word withdrawn by partner is not there, then we are not supposed to write this. If half of the goodwill is withdrawn, 2,500, 2,500. Nothing is given, 0, 0. If it is withdrawn, 5,000, 5,000. Hope you are clear. Yes, your revaluation profit we have written. Then total your credit side. From the total, if you minus everything, you will get 48,200, 23,800 and 20,000 as your balance carry down. Hope you are clear. Yes. Now, whatever balance you got, always remember, if you want centum, 100 of 100, please follow the procedures. Whatever balance you got, the same thing will be copied here, 48, 23 as well as 20. That will be called as balance brought down for next year or next calculation. Now, once you're done with your revaluation account as well as partners capital account, the last step will be called as balance sheet. Balance sheet is simple. Exactly, we have to copy the old balance sheet. If any changes happen like appreciation, depreciation, you are supposed to consider that appreciation as well as depreciation. Now, I'll go back to your old balance sheet. See your old balance sheet, we have bills payable, we have not touched only, copy the same value. Creditors, we have not touched only, copy the same value. Capital, it is a old capital, we don't want old capital, we want new capital. Where do you get new capital? In the partners capital account, you have written of 48, 23, 20. This is called as new capital. I'll go to liability side now. See your liability side. Bills payable, we copied. Creditors, we copied. We have written new capital. Any doubt? No. Now come to asset side. Whatever is in the old balance sheet, we have to take the same thing. I'll show you. In the old balance sheet, we have cash in hand, building, patent, machinery, debtors, stock. Remember these words. Cash in hand 15,000, but Jayanti bought 20,000 as capital. Add this and take 35. Building was 25, but 5,000 appreciated. 25 plus 5, 30. Patent, we have not done any correction, right, as it is 6,000. Machinery 35,000 plus there is a depreciation, 35 minus 7, it is 28. Debtors, it was 20,000 minus 600, but now it is additional 1,000 bad debts is there. 20,000 minus 1,600, 18,400. Now, from the total, if you minus, will you get anything in this? No. Why? Because this is called balance sheet. Balance sheet is not a statement. Balance sheet is a final calculations. Now, in this, the total is 1,22,000 and the total is 1,22,000. This is all about your problem number 1, the calculation. What we prepared? Revaluation, partners capital, and finally we calculated balance sheet. Very important one, because in this we have goodwill, we have sacrifice ratio, and we have all the calculation included in this. Now, so we have done with your problem number 1. These are the working note. As I told you, the sacrifice ratio and gain ratio, I'll take separate one revision class on this particular topic. Now we'll go to your problem number 2. That will be, there are 3 partners already there. A, B, C are partners in a firm, sharing profit and losses in the ratio of 6:4. And the balance sheet as on 31st March 2017. In this, now we have A and B are partners in the ratio of 6:4 and C is admitting into partnership. He is called as new partner. Now, in this, we have all the liabilities and we have assets also. We'll go with the same old procedure only. Now, I don't go in detail. If anything is new, I'll explain you. On 1/4/2017, they admitted, call it as C, into the partnership for 1/5 share in the future profit. Now, D brings cash of 50,000 in his capital and 40,000 towards goodwill. Half of the goodwill amount is withdrawn by old partner as per AS 26. Accounting Standard 26. Now, reduce stock by 10% and increase billing by 69. Provision for doubtful debts is decreased by 2,000. These are 1, 2, 3. These are your revaluation items. Now, your revaluation account, it will be like your depreciated, yes, and there is appreciation, yes. Provision for doubtful debts, yes, 9 plus 2, 11 and 11. From 11, if you minus 8,000, you will get 3,000. Hope you are clear. Exactly what we did for the last problem, the same procedure. I told you the shortcut also, what will come under credit side and what will come under debit side. Now, we have done with your revaluation account. Once you're done with your revaluation account, what is the next procedure? Partners capital. Under partners capital, already I gave you the hint. What is the format? See, they have started with capital. And whatever capital bought by C, 50 plus 40, it is 90,000. C's capital, like 40,000 into 6:4. There is nothing but your goodwill. Whatever bought by the new partner goodwill has to be distributed 24/16. 6:4. What is the ratio? 6:4. Have they given new ratio? No. So then what we are supposed to do? Old ratio only you should consider. Now, next, reserve is given in the problem. So 6:4. Revaluation profit also 1,800 and 1,200. Similarly, go with, as I told you, goodwill, how many steps you have to follow? 3. One is goodwill, take it in C account. Then goodwill distribute to A and B. Again, goodwill will come under C. For C, it will come credit side also. It will come debit side also. Then, once you have done, goodwill is withdrawn 12,000 and 8,000. Whatever goodwill is withdrawn, that has to be taken. 24/16 is there, but in the question, they have mentioned half of the goodwill. I told you in the last class only, full taken, copy the full. Half taken, take half. Nothing is taken, don't write anything. Now see, half of the goodwill is taken. Now, from the total, if you minus all this, you will get these balance. Hope you are clear. Yes. Now, from the total, if you get all these balance means 1,03,000, 1,02,000, 50. No changes compared to your last problem. Not only this problem, all the admission of your partnership will be based on these kind of questions only. Now, once you're done with that, come back to your balance sheet. Under balance sheet, your old cash balance, amount bought by new partner as a capital, goodwill, half amount. Why half amount? Means half amount already taken by old partner. Bills receivable, copy paste. Debtors 6,000 minus 2,000, it will be like 4. 1,20,000 minus 4, it is 1,16,000. Why it is 6 minus 4? I'll show you. See, debtors already we have 1,20,000 minus 6. Out of 6, 2,000 is cancelled. Why it is cancelled means they have given, see, provision for doubtful debt decreased by 2,000. Your 6,000 will be decreased by 2. 6 minus 2, it will be what? 4,000. So it will be, yes. So 4,000, 120 minus 4, it will be 116. Stock will be 80 plus 8 minus 8, 72. Your building is appreciated. 60 plus 9, it will be 69,000. Once you're done with this, again come back to your liability side. Under liability side, the creditors is over, bank overdraft just we copied, and the capital will be the same thing, 2,55,000. This capital you have taken from where? This capital you have taken from 1,03,000, 1,02,000 as well as 50,000. Now we are done with your assets, and now we are done with your liabilities. Your liability and asset we have completed. Particular or liability, particular or asset. Now, so these are the calculation. You got your total of 3,63,000. You got your total of 3,63,000. This is all about your balance sheet. Now, so we have done with 2 problems on admission of your partner, 1 problem with sacrifice ratio, 1 problem with the old ratio. Please work out these 2 problems. I'll go back to all your slides. Please take screenshot. Your problem number 1, adjustments, your solution part, partner's capital account, your balance sheet, working note. Problem number 2, your adjustments, solution part, your solution part, and your balance sheet. So this is what your session 3 as well as your unit number 3 are of your revision class. Next class will go with your 4th unit, that will be called as retirement as well as death of your partner. Thank you.